Good morning, everyone, and thank you very much for joining me. This is the morning market review. It's Tuesday, it's the 8th of August. My name is Russell Shaw. I'm a senior market specialist at FXCM, and my email address rshore@fxcm.com. Just going to go ahead and bring up the disclaimers. We're going to start off with a high risk investment warning. I'll keep this on screen for a few moments. Good morning, Raj. Thank you for signing in. Pleasure to have you on the webinar. All right, and let's just bring up the market commentaries disclaimer. And just finally, here is our references, MarketScope 2.0 and TradingView. I think we'll start off with TradingView. Let me bring that up. Hey, Kim, good morning to you. Welcome, and thank you for signing in. All right, we're just taking a quick look at the yields. This is the 2-year yield. And what's interesting here to me is it looks as if we've got a reference candle reversal right there. Okay, and if we have to put in peaks and troughs, I think we get an interesting picture. We get a reference peak over here. I'll just put P for peak. We get the trough over here. And then we've got a lower peak, don't we? So now we're waiting to see if we get the lower trough in. And that would put the yields into a downtrend. And yields coming down would be very interesting on a number of fronts. Number one, yields coming down could potentially hurt the dollar. Okay, so we'll take a look at the dollar in a moment. And secondly, yields coming down could be a tailwind for growth stock such as the Nasdaq. So it's very interesting to see that we're getting this peak trough, lower peak, and then I think what we can do is we can just keep an eye out and see if we get a lower trough. We can take a look at the longer term bond. Let's take a look at the 10-year just to get an idea of what's happening there. Hey, Katie, good morning to you. Welcome. Nice to have you on the webinar. All right, so here, this is a little different. We don't have the lower peak. In fact, we've got a higher peak here. So what we want to do is just label these as follows. Trough, peak, higher trough, higher peak. And then the obvious question is, well, why would longer term yields be moving upwards while the shorter ends moving downwards? I think that the answer to that probably has multiple answers. Firstly, I think that the fact that the shorter term yields are coming down probably reflects that there is a moderation in Fed monetary policy. And then the fact that the longer term yields are staying high, I think could mean one of two things, or possibly both. Number one, that yields are going to stay higher for longer. That's what the Fed's been telling us. Or that the economic conditions remain positive going forward, and they anticipate higher yields in the future. So we'll just keep an eye on that. So just a divergence between the short term and the long term. And what we can do is we can just subtract the 2-year from the 10-year just to get an idea of the inversion of the yield curve. And what's interesting here is it's flattening, okay? It's flattening. So I think what we can call this perhaps a bullish flattening. Okay, you get a bearish steepening and a bullish flattening. Looks to be flattening here. And that kind of suggests the chances of recession are diminishing. So quite interesting just in terms of the yield curve analysis. Let's go through to the US dollar and see how the US dollar is behaving here. And with the shorter term yields coming down, okay, I wonder if that's going to enforce the upper shadow on the dollar. So we've put in peak trough, lower peak, lower trough, lower peak. Okay, there is a resistance here. Why do I say there's a resistance here? I'm reading it off the tail. There's selling pressure off of that tail, but we can extend it. Okay, and there's resistance coming from the last lower peak as well. So some sort of resistance, I think, manifesting on the longer term chart. It is a resistance on the longer term chart. Is there opportunity for us? Let's just go down to the daily chart here, and the daily chart in zone 1. Zone 1 is our zone of strength. So I'm reading this as a slight ambiguity at the moment. I want to just reiterate. I've got a seller's tail on my candlestick suggesting resistance. I've got a potential lower peak which suggests a continuation of the downtrend, and then on the daily chart I don't have compliance there. That suggests difficulty in terms of the trade. And what we can look for here, let's take out these lines, and what may be the way to look at this is, well, what happens if we get something like this? Peak, trough, okay, and then what happens if we get a lower peak here? So I'm putting a question mark. Okay, again, this is speculation because I'm suggesting that the resistance on the weekly has an influence on the daily, and if it has an influence on the daily, then maybe some sort of slip back from zone 1 into zone 2. So the question for us to answer is, do we get a slip back into zone 2? What would nullify this? I think what nullifies this is if we get a bullish reference candle. Okay, so today is an important day. We're kind of at a fork in the road. So we want to see if we slip back or if we make progress and get a bullish reference candle here. Let's just go down to the hourly chart and see what the hourly chart is suggesting. Hello, Antonine. Thank you so much for signing in, and it's a pleasure to have you on the webinar. All right. Now, what's interesting about the hourly chart here is a potential pattern in the making. Okay, can you guys see the pattern here? It's again, I want to suggest speculation, but and then we can label as left shoulder, head, and then I wonder if this is a complex right shoulder that is manifesting here. Why would I go with that scenario? Again, I default back to the weekly, and I see that we've got this overhead resistance on weekly. Okay, so if we've got this overhead resistance on the weekly, then take a look at the R1, R2 level for resistance and see if we get a bearish cross, a dead cross to the downside with the EMAs, and if the stochastic crosses to the downside as well. If we get those sort of downside crosses, okay, then the idea is, do we have the momentum behind us? And we'll only tell if the momentum is behind us if it drops through to the 20 or under and holds there. Now, this type of analysis hinges on the resistance on the weekly. Okay, that's really what it's hinging on. And if we get a close above yesterday's high, we're going to have to rethink this scenario. And if it moves past R2, we'll have to rethink the scenario. But given the, let's call it the staunch direct overhead resistance, let's see what the euro US dollar has in store for us. If there is a overhead resistance on the US dollar, then perhaps there'll be an underlying support on euro US dollar. Let's go down and take a look at euro US dollar. Okay. So on the euro US dollar, we've got the higher trough followed by the higher peak, and now we're looking to see if this is the next higher trough in the series. What we can do is take a look at this candle here, okay, which is, let's call it a dragonfly doji. Okay, effectively what's happened here, let's just put in some axes, and we look, this is last week's candle, okay, and what we have is we had an open, okay, we had a slight movement up, then we had a massive fall to the low of this candlestick here. Now the question to ask is, well, who's in control at the low? Who's in control at this point? It would be the bears, okay? But then what subsequently happens is that the bears lose control and the bulls push price back up here. So who's in control at the end of the week? It looks as if the bulls are in control at the end of the week. So we can put in a support just over here. Okay, so just like we have that resistance on the US dollar, it looks as if we've got the support on the euro, and a close above last week's high would give us a bullish reference candle. It would also confirm this higher trough. If we went down to the daily chart here, okay, what we do have is on Friday, we do have that bullish reference candle. Okay, so on Friday, we got the bullish reference candle, and now we're looking to see if there's going to be some sort of swing off of that. And the swing would be suggested if we move from zone 3 into zone 2, that would be a movement forward. And not only would that be the signal that we're looking for RSI to pop above 50. So two things here, a movement above zone 3 and a movement of the RSI above 50. We already have the reference candle. It is just yesterday's candle. Let's just put an arrow in. I'll show you yesterday's candle. Yesterday's candle has some bullishness to it, some, okay, because there is a buying tail. But by and large, there is uncertainty. Why would there be uncertainty? It's what we call an inside day. The bulls didn't have the fortitude or the power to take out Friday's high. So we're looking for movement above Friday's high. What could be the hold up there? Thursday and Friday are big days this week. Thursday we see CPI inflation. Friday we see PPI inflation. We already saw on Friday that the non-farm employment change was lower than anticipated. If we see a further moderation, in inflation, I think we may get the movement above Friday's high. So again, I'm going to suggest we at an important day today, crossroads. Okay, so if we get the movement up on the euro US dollar, let's just go back to the US dollar itself. If we get the movement up on the euro US dollar, then potentially we get the lower peak, okay, on the US dollar. Let's just keep an eye on that and keep an eye on the R1 pivot. All right, let's just go to euro US dollar hourly, see what the euro US dollar hourly is suggesting to us. Okay, let's just do a quick revision from the top down and then do the hourly analysis. Weekly, we've got an uptrend. We've got a situation where we're on support, bulls potentially in control. We've got a bullish reference candle coming in on zone 3, and we're looking to see if it pushes us into zone 2 and for the daily RSI to pop above 50. Do we see any potential movements on the hourly? And the answer is potentially, of course. You've got the golden cross set up over here. Whether we get follow through or not, we're going to have to wait and see. But it's the 5-hour EMA looking to move above the orange 10-hour EMA. That would be trigger 1. And then the stochastic looks to be crossing to the upside. That would be trigger 2. And then if we get some sustained momentum, we should get the stochastic into the 80 plus area. We'll have to wait and see if that's what happens. But if we do get it moving towards the 80 plus area, and we do get the bullish crossover here, all right, then we start moving from zone 3 into zone 2. Just got to be mindful of the fact the latest candle is a gravestone doji, which is a bearish candle. So we got the cash open about 2.5 minutes. We'll see if that brings some sort of positivity to euro US dollar or not, and we're looking specifically for the golden cross here. All right, let's take a look at the cable pairing here. All right, top down analysis again. So this is the weekly chart. This higher trough here should actually be HT question mark, because we don't have the reference candle just yet. What we have is a very small cable candle for this week. It's only Tuesday, but certainly some uncertainty in direction and no real follow through. We do have the buying tail here, so we can put in some support. All right, let's take a look at the daily chart. And this is not quite as positive as the euro. Whilst there is a reference candle, okay, this is it's quite a poor reference candle, because here is the reference candle, and then the condition 2-3. Okay, well, the close is very low compared to the high of the candle. So there almost is some sort of uncertainty when we combine these two candles. Some stabilization yesterday, okay, but now we need to see if the bulls can move us back into zone 2. Can they move us from zone 3 into zone 2? Just like we said, the RSI has to pop on the euro, it has to pop on the cable pairing as well. Let's just go down to the hourly chart. If we go get the pop, okay, we need to get some sort of bullish crossover here, and we'll need to get some sort of bullish crossover here. If there is no bullish crossover, and if the stochastic hangs out in the lower quintile, then we're going to see the S1 level being challenged. the idea here, okay, so we've just gone top of the hour. We'll see if we can get some sort of bullish crossover on the cable pairing here. That would help with getting us from zone 3 into zone 2, which effectively helps with us getting towards the next higher trough on the weekly series. And we've got this underlying support right underneath us on the weekly. So let's just see if we can get some sort of bullish cross here, or if the stochastic maintains on the lower quintile. All right, let's go through to DAX. We'll end off with the DAX. And unfortunately, DAX pulled back last week quite severely. It was showing some good signs of strength. It was showing some positivity just prior to last week. And then last week, the resistance area came in and pushed it back down again. And the reasons for that, I think, threefold. I think that there was some poor earnings coming out of the region. I think that fourfold. I think the economic news was poor out of the region. I think the US yields were high. And the fourth reason is, I can't recall, the resistance coming in, okay, which is at about that 16,400. So it pushed the DAX right back down. So now we've started to relabel again. We've got trough, peak, higher trough, question mark. There's a problem with this because the candle, this candle is a long candle. To get some sort of reference candle here is going to be difficult. This is a complex, it's going to turn into a complex reference candle. So there is some sort of challenge in determining if we get a higher trough or not. If you take a look at the daily chart, well, the daily chart's really hopelessly in zone 3. And the fact of the matter is the RSI is below 50 as well. It does look as if bearishness is coming into the DAX for the day. Let's just go through the crossovers. So we've got trigger 1. Okay, we've got trigger 1, and it's pushing to the downside. We've got trigger 2, pushing to the downside. And if it makes its way through to the 20 minus area, I think it's going to take out the support here. So it's really now a story of momentum. We've got fairly strong support, okay, and we'll see if that support holds. It really needs to see the stochastic bounce back towards 80. If it carries on towards 20, the support's is going to break. Okay, so that's where we'll go up to this morning. If there's any questions, please go ahead and type those in. There won't be a webinar tomorrow, okay, but we'll be back on Thursday. So just keep that in mind. All right, I don't see any questions coming in, so let us wrap up here. Would DAX have an inverse relationship with the euro? No, I don't think so. I don't think so. I think that a lot of the DAX companies are exporters. So I think if the euro comes down, that would actually be a tailwind. And I think that the dollar would have the inverse relationship with the risk assets. So I don't think there's an inverse relationship there, Raj. All right. All right, let's wrap up here, guys. Thanks very much, and I shall speak with you guys on Thursday. Cheers.